Hey, what's up, guys? Welcome back to Daily Crypto Analysis. What we're going to do today is quickly go over Bitcoin and analyze it via logarithmic regression analysis. So, the first thing I want to do here is quickly go over sort of a fundamental point that I think is important when we're going to assess the Bitcoin market. And what we have here is the Bitcoin price over time. This is in years since Bitcoin has been available on exchanges, and we're looking at Bitcoin on a logarithmic scale. Um, so the blue lines indicate the halvings. As you can see, from the first halving to Bitcoin's peak price was 364 days, almost exactly 1 year. From the second halving until Bitcoin's peak price, it was 526 days. So, that begs the question, is this a trend worth, taking note of? It's only two data points, so it's kind of tough to say. But what we can see is that, you know, like you guys have all heard a million times, we didn't see a blow off top here, sort of indicating that we have yet to reach the peak. Um, this cycle was approximately 40% longer than this cycle was. So that begs the question, is this cycle also going to be longer than the prior? And, I tend to believe that it likely will be, if for nothing more than as the total crypto market cap increases, especially with respect to Bitcoin. It's much more likely that we'll be entering into longer cycles as there's more money in the market. It's much more difficult to get these, giant shakeouts where we're seeing, 83% drop here, 87% drop here. Um, you know, Even in May, we had a pretty big shakeout, but it wasn't even close to what we saw here. So, with that said, what I've done here is using, like I said, logarithmic regression. We've drawn a best fit line through Bitcoin using only the data from the, let's call it the non-speculative phase. So this is sort of how I think about Bitcoin. It basically comes in two phases. One is what I call the accumulation zone, and let me sort of show you guys here what I'm referring to. Okay, so these areas here in white, here, sort of in this region, here, and here. These zones are collectively, the accumulation zone. And what that means is when Bitcoin is down at these levels along the regression line here, it tends to be the very best time that you can get into Bitcoin, because once it's down to this level, historically, it's at or near its lowest point. So if you can be accumulating Bitcoin during these times, you're likely going to experience the largest profits. As you can see, if you can get it in this region. And so what the white area is with respect to the red, these are the times when it's within a certain percentage, in this case 25% of within 25% of the regression analysis band. So there's another interesting trend that's developed here. And so what this is in absolute terms what Bitcoin it, what its current price is as a percentage of the regression band. So in other words, if right here the regression band is at 100 at this line, this is the regression says the expected value of Bitcoin is 100, and in reality its price is about 600 here. It's 600 it's 600% higher than what the regression band indicates. Whereas here, where the white line meets the regression band, it's at the regression price. So, it's 0% difference. So, earlier in Bitcoin's history, its variance was very high. As you can see, however, the variance has been trending downwards. So that is to say, Bitcoin is becoming less volatile. The price is moving closer and closer to the regression price. So that has two consequences. One is we would expect less downside risk, but as time goes on, we're also expecting less upside potential. And that makes sense, right? As the market cap of Bitcoin, as it goes to $1 trillion in the future, as it goes to 2 trillion, 3 trillion, there's just more money in the asset. And anytime you have more money in the asset, it becomes increasingly difficult to move the price one way or the other, especially once you start getting more institutional money in Bitcoin, which I think is definitely very close on the horizon, reaching sort of the precipice where right now there's a handful of institutions invested in Bitcoin, but as the regulatory climate opens up for the asset class, or as the regulatory climate, let's say, becomes more clear, because right now there's a lot of uncertainty, and institutions, a lot of the more conservative institutions, they're not going to go headfirst into something if they don't have complete regulatory clarity. So as that happens, I think that's sort of why we're seeing this. As institutions begin to get into Bitcoin, the volatility decreases, and we can see this trend line. It's not exactly perfect, but it's pretty darn close, right? And so what we can do then is take a sort of a margin of error with the regression, and that is to say, the light blue line is the regression band, whereas the darker blue lines sort of show the areas where you might expect with reasonable confidence that the price of Bitcoin, when it's in these ranges, are the best times. So, you can even see the lower confidence band. We've only been below it for very, very short times twice. Once here and once here. So, I guess we were sort of right at it, perhaps, right at it, or very, very small quantity below it. But we've only significantly, or not even significantly, but we've only been definitively below it for two times, and one was the COVID capitulation event. One thing you can notice, though, is both times that we've been below it, for right here and here, that was the start of the the bull market. Long, protracted bull market, starting here, moving up, and right here, and moving up. And we if we go over to this here, we can identify those 2 times, and it's right here and right here. And you can see both times, once we came out of this event, we started a slow march up, and from this trough to this peak of 8,202%. And from the COVID capitulation event to here of 1,159%. So, I think essentially, what this tells us is that these regression bands, have some utility in guiding our entry points into Bitcoin. And, in one of the upcoming videos, I'm actually going to expand on this a little and hopefully show you guys, specifically how we can use this to, guide our investments just beyond, once we're in the band, because it can get more specific than that. And, if you're wisely DCAing, basically what you would want to do with this is, when we're in these regions, in the red regions, perhaps either, DCAing out of Bitcoin, or, DCAing less into Bitcoin. And then when we get into the, what I call the accumulation zones, this is when you'll increase your DCAing, and when we're in the capitulation zones, that's when you want to really get into Bitcoin, because historically the most massive gains have been, when we're below the lower confidence band, regression band. So I think that's it for tonight, guys. And, if you guys like this kind of content, like and subscribe, and, leave a comment and let me know if there's anything specific you guys would like to see. All right, guys, thank you. Have a good night.